Week. Let's bring in Aberdeen's global head of equities, Devan Kaloo. He helps oversee about $470 billion there. Thanks for coming in. Good to see you. We got Q1 GDP under our belts, and I guess the question in the back half will be about recession. Is that your base case?
Yeah, I think so. I think when we think about the rise in interest rates and the issues we've seen with the financial sector here in the UK and in the US, it's going to feed through to slower growth in the US.
Right.
Absolutely.
How slow and for how long?
Well, I think it's going to be pretty difficult to see where it bottoms out, and that's one of the big questions for the markets trying to determine. But I certainly expect it going through into 2024.
And how much can be offset globally by any kind of resurgence in China, for example?
I think that's really one of the interesting things, because when we look at China, China's recovery is pretty tepid. And one of the things we hope is that it's going to build up a head of steam. But so far, it's not doing that yet. So it's a bit hard to say that's going to be able to offset the slowdown we expect.
Yeah, it's remarkable. When they first started to reopen, we got a bunch of target increases for the year, right, in terms of their global growth.
That's right.
And then anecdotally, we began to hear from, thinking of BYD and maybe some multinationals, that it has taken a little bit longer than we're thinking. Dow is a good example this week as well.
Yeah, I think there's a couple of things going on there, right? So if you think about what's happened in China, over the last few years, you've had the regulatory crackdown, you've had the COVID lockdown, and of course you've had the property market going wrong. And it's going to take a little time to build up domestic confidence. And actually, that's the key. We haven't seen yet domestic confidence coming back into the Chinese market. There's
also an assumption that the recovery in China should be modeled after the recovery that we saw in the U.S., but I mean, they never got the stimulus checks that we did. So there wasn't that sort of balance sheet by the customers, because they were hammered by their property values going down at the same time, with no income replacing whatever income that they would have gotten otherwise because of the lockdown. That seemed like a big, misperception about the expected Chinese recovery.
Absolutely. So there was no way it was going to be a V-shaped recovery, primarily because of the points you made. And I suppose the other thing is just we really need to see the property prices start to rise for that wealth effect to build the confidence. So I think as the data points come through in China, there'll be increasing optimism about the Chinese economy. But to be honest, it's about the Chinese consumer that is going to be the driver here.
What about property prices, though? What are your expectations when it comes to how long it will take, or what will actually spark what has been a fairly steady decline and a fairly depressed sector there?
Yeah. So we've seen a pickup in secondary transactions in China, which is a really good leading indicator, and we've started to see property prices picking up. And then really for the two things that need to drive this economy going forward, one is primary transactions and therefore activity on the back of that, and of course property prices. But you've got to balance that with the government's desire not to see speculative activity. So in terms of our view, I think the recovery in China is coming through, but it'll be moderate, because one of the things the Chinese government's got to manage is the stop-start, trying to make sure that things don't become too speculative.
So then, turning to the Fed next week, do we have the space to do another 25, or do you think it matters that much?
I think it definitely has the space to do that, because certainly we don't see any rolling over significantly in the US. The consumer range very strong. But we haven't similarly seen what's going to be the flow through from the financial problems here. And I think that's one of the really big issues, because when you think about the financial sector, it's a liability issue. It's the liquidity issue. And I think on that one, that's where the regulators perhaps have missed it. And as a result of that, you're probably going to see significant regulatory changes going forward. And we do need to think through about what that means with regard to banking system, how that acts as a transmission.
You think that'll be a drag on overall growth?
Absolutely.
Just the regulatory changes alone?
Absolutely.